There's some potential good news on the horizon for the Phoenix housing market. Let's go ahead and break that down right now. According to AZ Big Media, we're seeing a return to sanity within the Phoenix housing market. So yes, that means that prices have cooled a little bit, but they have not crashed. One of the questions that I hear the most is the market going to crash? And the answer is realistically probably not, and here's why. We're nowhere near in the situation like we were in 2008 when that crash happened. When that crash happened, a lot of homes were underwater. People couldn't even afford their mortgages. There was a lot of short sales going on. People were getting approved for mortgages that they shouldn't have been approved for in the first place. Today, there's a lot more strict lending criteria, so people who are getting qualified are able to actually afford the homes even if they're pretty tight on the budget. And because housing prices have increased so much over the last 5 years especially, people who have bought houses are sitting on a lot of equity, so their chances of actually going through a foreclosure are very low. In fact, there's about $35 trillion estimated in home equity across the country, which is crazy. So what this means is that people who are owning those homes have the ability to walk away if they get into a tight spot and potentially still come out on top. And this is also furthered by a statistic that says that over 90% of people have positive equity in their homes. So yes, prices have stabilized and have come down quite a bit. And it's important to note that areas like Phoenix, California, Florida, these places are the ones that typically lead the trends in the real estate market. So we've already probably seen the bottom evidence in the charts and data over the last couple of weeks, and we're starting to see a rebound right now. On my real estate team, every single week we break down the numbers. We talk about the trends that we've seen over the last 10, 15 years, going back to the 2008 situation. And based on those conversations and that data, it looks like we are actually rebounding and might have a pretty strong year, end of the year coming up here. So what does that mean for you as consumers? As buyers, that means that you have more negotiating power. There are more listings on the market, around 25,000 right now in the greater Phoenix area. So that gives you more negotiating power. Think about concessions, think about closing costs being covered, think about rate buy downs. These things are really great for you. And for sellers, this means that you need to probably temper those expectations. Be realistic with your pricing. If you try to overprice, your house will sit for a lot longer and likely not sell. You have to chase down the market, and that's not what you want to do. The strategic choice here as a seller is to price your house right where it should be and get more interest in it, and then have potentially people bid on the property and actually go over asking price. So realistically, what I think is happening here is we are returning to normalcy. Hopefully this housing market will be a little more balanced, which is a win-win for everybody. Go ahead and drop your thoughts and comments in the section below, and let's have a conversation. Take care.